The US dollar is modestly lower in trading here today. In this video, I'll take a look at three of the major currency pairs from a technical perspective and tell you where the risks are, where the bias is, where the targets are. Those are important for you as a trader, and I hope you benefit from it. So let's get started. Of the three currency pairs, the euro versus US dollar has moved the most. It is currently up around 0.3% on the day. That's a lower dollar. And in the process, what have we seen from a technical perspective? Well, this is the 1 hour chart. And what we saw in trading yesterday was the price move down to a support level down through here. This level was a swing area going back in time. You can see the number of different times that the price came within this swing area through here. It was either support or resistance through here before moving it to the upside. We returned back to the level right through here, found support. We fell below that level, and then in trading, I guess that's Friday, the price came right back down to that support area, found support, found buyers, and pushed back to the upside. In trading yesterday, we came to that area and found support. So that was the key for the bounce back. We needed to get below that level, needed to get below the 100-hour moving average. Couldn't do it. So what did we do? The sellers turned to buyers, and then we started to trade above and below the 200-hour moving average. That's a lower line right through here, and once the market decided that the upside was going to be the way to go, it was came off of this clue right here, off of the 200-hour moving average, also off of the 38.2% retracement, and this swing area right through here. I'll just draw a horizontal line across here where the 38.2% retracement is of this move to the downside, and we based against that level. That often is a clue for traders to jump on board, and if you did, you benefited from it because the market ultimately moved to the upside. Now we're sitting here at the 50% target. That's the next key target level right through here, and also near this swing area right through here, where if we go back in time, let's see, we go back to these sort of different swing highs here. We had a fail break here, and then we used that level here to push to the downside before breaking to the upside. Once we broke to the upside after that fail break here, the market said, let's go higher, and it did. Came back down to that area, found some up and down trading action over here as the market decided what it wanted to do near that level before then breaking to the downside right through here. So there is a history around this 50% retracement level, so I'm not surprised that the market has found some resistance at near that level. It's going to take a move above the 116.31 level and away from the 50% retracement level to increase the bullish bias for the euro versus US dollar trading today. If you want to be a seller of the euro versus US dollar, you'd be going against what is the momentum in trading here today, with the momentum since the lows last week where we bottomed against the 100-day moving average. But what you want to see is the price move away from that 50%, come back down toward our 38.2, toward our 200-hour moving average, see what happens there. So that's a full look at the euro versus US dollar. Take a look at the dollar versus yen. In this case, I'm going to keep it simple here off the 4-hour chart. Why? Because in trading this week, we had resistance against the 100-bar moving average on the 4-hour chart, and this week we had support against the 200-bar moving average on the 4-hour chart. Those are technical levels that traders look at and lean against, and indeed they did up here and they did down here. And if you did too, you would be beneficial as well. In between we have the 38.2% retracement. That 38.2 is of the move down going all the way back to the beginning of the year. The high for the year to the low for the year. You don't see it, but it's up there to the low for the year right down here. And what we saw, that level is in between those two levels. And in trading yesterday and today, we broke above that level, and then we came down toward it, and we're still finding support. We have that 100-bar moving average on the top side to get to and through. If the market is able to get above that level at the 148.02 level, that would be more bullish for this pair. By the way, that level also corresponds with this high right here, which gives it a dual reason why the price should either find resistance or use it as a springboard to further upside on a break. So be aware of that level. That's going to be the key level in trading, not only today but going forward. The second level is 38.2. The third level is the 200-bar moving average on the 4-hour chart. We found support against that earlier this week. Finally, let's take a look at the sterling versus US dollar. From a technical perspective, what sticks out to me on this chart is how we have found support here against the 100-hour moving average. That gave the buyers the go-ahead to push higher. Now, it didn't run to the upside, but we kind of meandered our way to the upside in trading here today. We tried to move higher, couldn't get above the high from yesterday. Found willing sellers to push the price down, but we couldn't get down to the 100-hour moving average, and we since started to rotate to the upside. Now, as we come in for this session, we are up here ahead are moving above the 200-hour moving average, that's more bullish. But look at what's up ahead as well. And the target ahead is a 100-day moving average. So this area right here is a big cluster of technical levels that traders have to either work through. That's kind of like landmines for traders. If you're bullish, you want to see get it above both the 200, both the 100, and stay above those levels, and open the door for further upside. If you're a seller, you would look against the 200, the 100-day moving average as a level to sell against, and then hope that the price starts to retrace back down through these levels and work down toward our lows. So that's the technical looks that I look at for those three major currency pairs, and kickstart your trading day today. Pick your spots, find your levels, lean against them, understand your risks and your targets, and you'll do well as a trader. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.